We have wasted time. That class has wasted our time. So let's proceed chap. You write and say the main concern is on how to account. The main concern is on how to account for the books of partnership. How to account for the books of a partnership. For the books of a partnership. In the event that the partnership firm is to be converted. In the event that the partnership firm is to be converted to a limited company. Is to be converted to a limited company. In the event that the partnership firm is to be converted to a limited company. Full stop. Another hyphen. The following should be carried out during conversion. The following should be carried out during conversion. During conversion. Should be carried out during conversion. Number one, valuation of assets and liabilities. Valuation of assets and liabilities. 2, determination of gain/loss. Determination of gain/loss attributable to the partners. Attributable to the partners on conversion. On conversion. You can put an hyphen there because I don't want to explain much about it. Put an hyphen. You say this is determined by preparing. This is determined by preparing a realization. Preparing a realization account. By preparing a realization account. Next, determination of goodwill. Determination of goodwill to be recognized in the books of the new company. To be recognized, determination of goodwill to be recognized in the books of the new company. And finally, determination of the purchase consideration. Determination of the purchase consideration. Determination of the purchase consideration. Hyphen, just 1 minute. So determination of purchase what? Consideration hyphen what was said. Purchase consideration hyphen, then you say this is determined. No, not determined, sorry. This is considered to be the balancing figure. Considered to be the balancing figure in the partner's capital accounts. In the partner's capital accounts. Full stop. Full stop. Correct. So actually there are no more stories. We are going to question straight. A lot of issues we will discuss in the questions. So write the illustration. We don't have let's not create stories where stories doesn't exist. So write the illustration. Get out your past papers. Now that everyone is here, if you fail to read that theory handout which I've given you, don't blame me after exam. Because your paper, not even 20, your paper carries over 20 something. The Bushek formula sitting. Last sitting theory was constituting what percentage of that paper. Very important. Let's just check only that one, then it can show you how the theory is very important. Question 1, the entire question 1 was theory. That is 20. Question 2, there is no theory. Question 3, no theory. Question 4A, sure. Question 4A was theory. How many marks? 10. That is 30. Then question 5, bottom up. This is triple bottom. So that is how many marks? Not even 8. There are 2 of them. Yes. The other one is 12. So it's 8. So 8 plus that one, 38. Imagine 38 theory. Is that not serious? Yes. If all those 4 are sitting, have captured for you there, the solutions. If you check that paper, it has August 2022. Even for April, like that, as we go backwards. So please make sure you read those theory. When you read this handout, the entire of this handout, you read it 4 times. As you analyze 4 times, they will bring. I know the theory is coming, it will come from this handout. So don't tell me after example, even you could have been serious to tell us it is coming. They will bring theory, not less than 30 marks, and all of it will come from here. So make sure you read them properly. Imagine 38, that is significant. And there are things you can't guess. So go to November 2019. I want to start with November 2019. I don't know that people want to pray because I want us, well, when we start that question, we go to the end without a break. Is it? Don't pray. Let's open the question first, then we go for prayers. Let me pray for this question as well. November 2019, I don't know which page, but I know there's a question. I'm asking first illustration. We'll handle it keenly. Right. Where's November 2019? I don't know. I'm also looking for it. Page 43. Page 43. Let's check page 43. Question number 1B. Yes. So right there, November 2019. Question 1B, page 43. Then we will be assignment. Which question? So that one. As we go for prayers, you can be reading the question, because when you read it, will give me an easy time to proceed. So go for prayers. Huh? Yes, you can pray. You can particularly pray for this question. Prayers. So let's read the question together. It says, Chanda, Pete, and Tenda have been partners in a business for many years, sharing profits and losses in the ratio of 2:1 respectively. On 30th of June 2019, the partners agreed to convert their business into that of a limited liability company to be named Chapete Limited. So they are converting it. Okay, what you need to understand, this conversion does not mean they are selling. But now, because a company and its owners are separate, in quotes you view as if they are selling. Yeah? But the same partnership, they are converting it to a limited company. So the same partners are going to be directors in that company. The trial balance extracted from the records of the partnership as of 30th June 2019 was as follows. Property at cost. So property at cost total is 60, but of the 60, building goes with how much? 50. It means the rest is for land. Yes. And the reason why they normally try to separate the two is because land is not being depreciated. Plant and equipment, motor vehicles, furniture and fixtures, provision for depreciation. So provision for depreciation in the trial balance is always the accumulated depreciation. That is what you need to appreciate. Net profit for the year. So they have calculated for us the net profit. That is wonderful. Trade receivable and trade payables. Inventory, cash at bank balances, fixed capital accounts, bank loan, current accounts, drawings. I know it's not going to be that much important, but I know people do not know how to separate this. It's good to know the difference between fixed capital and current accounts. Fixed capital is an account which records the initial capitals which you contributed. But current account, you find the partners, they also deal with the company on a daily basis. Someone brings money. If a partner gets, maybe accountant has no petty cash, they give you petty cash, then you will refund later. They take money from the company, they refund. So that account where you record the day-to-day transactions between a partner and the partnership, that is a current what? Account. But where you post their capital, that is fixed capital account. The property, plant, and equipment in the partnership were being depreciated as follows. So building was being depreciated at 2% on straight line. Straight line means you charge depreciation on the initial cost, on costs. Then plant and equipment, 12.5% on reducing. Reducing means on net book value. Net book value means you first of all take the cost, you subtract the accumulated what? Depreciation is when you charge. Then motor vehicle furniture, as your eye is capable of seeing, depreciation for the year had not been provided for. So it means the net profit is not accurate because depreciation is an expense. And they are saying it had not been provided for. So it means we need to subtract it from the net what? Profits. Because depreciation for the year we should charge and take it to P&L. But now they are saying it had not been provided for. And at the same time, you are giving us net profit. So it means the net profit is not accurate. Is that okay? Yes. The partners were entitled to an interest on their fixed capital balance at the rate of 10% per annum. No salaries were paid to the partners. No problem. The tangible and current assets were to be transferred to the new company at their fair values as follows. Property, plant and equipment, those are different things. Huh? Property at 57, plant and equipment at 16, motor vehicle at 95, furniture at 35. So those are the values they are being transferred to the new company. The current assets and the liabilities were taken over by the new company at their book values. So the way they are appearing there is the way they were taken over. The purchase consideration amounted to shillings 110 million and was settled by the new company through the issue of ordinary shares of shillings 10 each to the partners in satisfaction of the amount due to them upon conversion. Required realization accounts, partners capital accounts, opening statement of financial position as at 1st July 2019 for Chapete Limited. So, fine. Realization you can prepare without much issue. Then capital account will need some issues. So there are 3 workings which I always advise, but in exam I can tell you what to do. 3 workings you need to do before you start presentation. 1, you need to adjust the net profit because they are saying the depreciation had not been done what? Charged. And furthermore, what you need to know, in partnership, profit is never left in the books. Profit is shared to the partners in what we call appropriation account. So adjust this net profit. That is the step 1. Adjust the net profit, share it to the partners. Then where you share it is called appropriation. Whatever is in appropriation, you adjust to current account. So that is working 2. You adjust current account, you determine goodwill arising on that conversion. Then now you can answer the questions comfortably. So let's start by adjusting the net profit. There is a problem there. So right there, adjusted net profit. What is the best time to read a FAR? What time is good for someone to read a FAR? Because I realize sometimes you are in a matatu, then you see someone reading. It is possible to read in a matatu, seated in front. I see some people, they sit near the river, then now they are reading. A FAR, someone is reading a FAR in a matatu without a calculator, without, okay, yes. UPI. Huh? I really don't think. The best proven, but I know this might be very difficult for some of you, but the best of the best time to read is proven. It is always this time. That is the best time to read. 2 a.m. to 5 a.m. That is the best time to read. The environment is very calm, very calm. Then a good reader is someone who reads while talking to himself or herself. You talk. Tell us UPI. What about intergroup sales? But now this one of you don't have a calculator, you don't have a pen, you are seated. Okay, UPI, that is not the best. You wake up when people are sleeping. This is the best time to read. That is the time you're dreaming you're in Tokyo. That's the best time to read. No, when you go home, eat and sleep, wake up at 2, and you read. You wake up at 5 instead of 2. So let's start. So those things of after lunch, during the day now, you try to do on your own what you are reading. Then you make reference. So it's like you are just trying to check what you read. Not now reading. If you read at 2 to 5, try it one day. You'll see the following day, the way you are different. All those things will stick. Yeah? But this one of reading while eating. Well, let's adjust this. But also I appreciate people are created differently. They are night people and they are dawn people. So like me, I'm a morning person. Night can't work for me. Immediately I eat. Sleep. Eh? You sleep before eating. I reported net profit. How much? They reported 28. And then, if there was no issue, I will go to appropriation, then I share this profit. But there are the people who have complicated the issues by saying depreciation had not been charged. So depreciation at the next time. So if it was not charged, then it means the profit is not accurate. So less depreciation. Less depreciation. Less depreciation. Depreciation, the first one is what? Buildings. So I want you to do this for me. Buildings, 2%. Straight line means on cost. So just check the cost of the buildings. Buildings was the first item there. They said it was 50. You'll bring it here. Plant and equipment. Plant and equipment, 12.5. But reducing. Reducing means you take the cost. Just what you speed. I'm not minus the accumulated of 13. Make sure you are seeing everything. I'm leaving you to work that, so no hurry. Motor vehicle, 20%. 20%. 20% of 12. Yes, motor vehicle is on straight line. Huh? 12. Then F and F. Are you discrediting your neighbor? That your neighbor can also not see. Times 4. So when it is reducing, you first of all subtract the accumulated. Accumulated is appearing in the trial balance. Yes. So can you bring all this? What I want a uniform answer from you. This one here. So give me those answers. Give me those answers. So how much is that? The total, me, I want the total. 5,300. Confirm. Can someone, only one person confirm from online that is 5,300? You know, we can move them. You hear, where's 300 coming from? One person to confirm, confirm. So adjusted net profit, the difference. So adjusted net profit, how much? 23,500. So you go to appropriation account. Appropriation account is where we share the profit. So appropriation account. Before you share the profit, you check if they were being given interest on fixed capital, salaries, commissions, things like those ones. So in this question, I saw they were being given interest on capital. Sure. Somewhere, note number 2. So check note 2. They were being given interest. So interest on capital, 10%. So Chanda, Pete, Sikidol, Tenda. So 10% on fixed capital. 10% on fixed capital. Fixed capital is how much? How much? It is 30, 20, 10. Check fixed capital. 10. 30, 20, 10. So this is 10% of this is 3, 2, 1. 2 plus that is 6. So what remains is what I'm going to share as profits. So how much is remaining? $17 or 18? 17? 500. Then you say profit share. Profit share. So Chanda, Pete, Tenda. What was their P&L sharing ratio? 2:1, 2 plus 2, 4, 5. So 2:1 is 2 over 5. So 2 over 5 times that profit, 17.5. 2 over 5 times 17.5. 2 over 1 over 5 times 17.5. So how much does each get? Okay. 7,000. So 7 balance. 35. 17.5 million. So we have shared it. Well, remember that is our working. So I said 3 workings are always necessary. You adjust the profit if need be, then you share that profit. Then now, because you have shared the profit, you have this account appropriation. Any item in the appropriation should be adjusted to current account. So you want to credit the current account with all these benefits which has gone to the partners. So I'm changing the camera online. Have their partners' current accounts. So, chop there. That's how current account should be. Chanda who? Better. And subscript. Partners. Hey, not that long. Why are you? Not that. Something small. Got it. So, Mary, you just something very fast now. It's not a drawing competition. Balance brought down. So pick the balances which were there. What were the current account balances at the start? 4280. 3560, 23, 40. All those items in appropriation, credit them in the current accounts. So interest on capital, 321, 321. Profit share 7735. If there was partners salaries, we have brought it somewhere there. So this is what is currently due to them, but there are some drawings they made. If they make drawings, debit their accounts. So drawings, how much? 1580, 1170, 710. If there was interest on drawings, you bring it here. Interest on drawings. So interest on drawings, you capture it there, which was not there. So the balance in this account, you will close it to capital account, because capital, I want to know how much is the total claim for these partners when now they are moving to limited. So your balancing figure, you say to capital account, the balancing figure. So can you give me the balancing figures here? And those balancing figures, we take them to the capital accounts. So very fast, get for me those balances. All right, so how much are balancing figures? Only when I come back, I should be expecting answers from you. How much? 12,700. 11? Finally? All right. I want us to get goodwill. Because, you know, here, though it's just the same partnership we converted, but in accounting now we are viewing as if the partnership is being acquired by the limited company. And on acquisition, we check what? Goodwill. So assess goodwill. That is the last thing. Goodwill. Assess goodwill. Assess goodwill. Purchase consideration. That one I know people know. Eh? Purchase consideration. How much was the purchase consideration here? It was mentioned somewhere. 110. Are you seeing 110 somewhere? Note number 5. Yes, check note 5. The purchase consideration was 110. Then you less what? Net assets. Correct. So less net assets. So net assets in now you don't follow the procedure of group. In group, net assets we take what? Ordinary, share premium, retained earnings, and revaluation. Those ones are not here. So here, you take assets minus liabilities. Taken over, the ones which were taken over. And more importantly, you record the taken over value. You know goodwill you are assessing for the new company. So you record the take, you know we have two values, the book values and the taken over. So you take the taken over values. So let me start with assets. So assets taken over, check note number 3. So 57 plus, no 57,000 plus 16 plus 19,500 plus 35, eh? But those are non-current assets. Check note 4 for the current assets. Current assets and liabilities were taken over by the new company at their book values. So pick the book values. From top, trade receivables. Receivables is how much? Are you seeing 18,200?
Yes.
Then inventory, 25,300. Cash,
8120.
Don't take it to the last. Don't push it to the last. Somewhere here before. Don't have it below 110. Somewhere there. So add accurately that one. Copy. 137 620. Then liabilities. Liabilities, they say that book value, all of them. So just check for them in the trial balance. Trade receivable and trade payable. So payables on the other side, how much? 14,700. There was bank loan. Bank loan is how much? 18. There are only those two. There is any other liability in that question. How much is the sum of those two? 32. 32. So you subtract to get net assets, you take the assets minus liabilities. So this minus this, then we subtract from 110. How much do you get? 104,920. Therefore, the difference is goodwill. So how much is goodwill here? $58. So those are the relevant workings for that question. From there, you can prepare whatever you want to prepare. So let's answer the question now. Time is okay. So required Roman 1, what did they want? They want us to prepare what? Realization account. So realization account, I want to explain only for this, then the rest I will explain. So just write there first, realization account. Realization account. In our village, letter T is not there. So I'm trying. Realization account. All TRS. So realization account there. Realization account. So shillings are in thousands. You know, here when I say realization account, the checker. But there's a place when you say they're just comfortable. In fact, they can even wonder when you say realization. So now, remember, partnership is being closed. Sure. We are converting to limited. So it means you need to close, So I'm just explaining for this, then the rest will be going straight. We close off all the what? the assets and liabilities. So how do you close assets? Assets ideally in the accounts, assets normally has which entries? Debit. So to close the assets, you credit. You credit the asset account, then you close it against an account known as what? Realization. So realization is debited with the book values of the assets. Book value is not taken over. This one is in the books of the partnership. So credit the asset offer. This is not required. So credit the individual assets, debit realization with book value. Book values. The opposite applies to liabilities. Liabilities normally have credit entries. So to close debit, the liability account, credit, realization. But now instead of taking you this circles, you just know this. Realization is debited with assets at book values and credited with what? Liabilities. Let's start. Let's start. Book values. So we have PP, property. So property, how much? 60. Minus, there was accumulated depreciation on building. You know, building is part of the property. So building accumulated depreciation was how much? Then this year, how much did you charge? The one we charged somewhere there. Was it 1? Check the depreciation we charged for the year. 1. So the net book value will be 50 what? 54. 54. Then plant and equipment, the same thing, 25 minus 13 minus, how much did we charge? 1,500. So minus 1,500. What do you get? 10.5. Because 25 minus this is 12. 12 minus 15. 10.5. It's nalala. 10.5. Ile mtu anaangalia figure lakini akili imestop. Angalia tu. Next. Motor vehicles. The cost was 12. Accumulated depreciation in the trial balance. How much are you seeing? A question. No, the 60, you know 50 is inside the 60. When you take 50, then you are separating buildings and land. You will just be doing, you are just going, when I tell you property 60, building 50, so land is what? 10. But inside the 60, there is land and building is the one which is depreciating. So they were separating building for the purposes of depreciation so that we charge. So in the 60 land and buildings, that's why you are looking at it from a picture. Motor vehicle 12. Accumulated is how much? 48. During the year we charge 24, that one 48. Is that 48? Yes. F and F 4 minus 16 minus, you have the figures, 400. Are you reporting 2? Yes. So bring for me receivables. Bring for me inventory. Bring for me cash. Those are the items which should feature here. Now don't close. So receivable was 18,200. Inventory. And the other one. I bring the liabilities. Liabilities, there were two. Payables. Payables was how much? Bank loan. $18,000. Then Chapete. Chapete, you know that is our customer. So our customer, how is he coming to be a customer? They are buying our company, of course. They are buying partnership. So the customer, we invoice them to pay. So the total purchase consideration was how much? 110. So this 110 is what we expect to realize from them. So you will debit the Chapete account, then you credit the realization account. So this one, don't forget. Chapete as a customer with the consideration, with the purchase consideration, it was 110. Full stop. Can you balance for me the account? It's over. That's how we prepare realization. Very simple. Can you balance? Don't post the balancing, but tell me the balancing figure. What's the issue here? The 110. Okay, you know, the realization, if you check it into deep, this side is recording gains. How does a liability become a gain? When someone is taking off your liabilities. When I take your liabilities, how do you feel? Eh? So you're feeling good. And when I'm taking your assets, very sad. So realization imposts an income on the partnership because they are being paid. So they're being paid how much? The consideration is how much? 110. So that income we credit the realization account with this 110. Students tend to forget about this, but provided you're from Alliance, give me the balancing figure. Don't post, just tell me how much and on which side. 13. 19,780. Okay, let someone confirm that figure. Confirm. Which side? This side or this side? Are you traffic police? Yeah. 19,780. So whichever side it is, that balancing is realization, partners will share. So it is coming on this side. So you come and say to capital, they will share their capital account. To capital account, Chanda, Bete, and who? Tender. They will share that balance in their ratio, 2:2:1. You've said 19,780. Yes, share to them that balance. So share to them like that. Each person takes how much? Nine. That's 9. So that's 9. I was looking I'm a holder. How much do you get? 12. The last one. What's the question there? How many marks? 6. So 6 is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So of course, you bring the totals. The totals down here. What would you want us to close? The totals. Oh, how much is the totals? Yes, realization is over. 1472. Like that. Yes, it's that one. That is the realization account. 1472, 700. I read. Now, let's go to Roman 2. Hey, order. Let's go to Roman 2 of required partners. Yes. Yes, hiyo makosa ulifanya usifanye next time. Yes. Hakuna mtu anamoda hizo kidogo ndogo. Posting ndio kitu muhimu. But now because you have known, this is how it should be prepared. Not might be. At maybe time might be limited during exam. It will be. You might do some tricks there. Yes. If God has brought you up to here, why should you not share? Yes, up. No, share. Because that one is 30 seconds. You just say 2 or 5 of this, and this is the same and minus. Yes. So that time you are waiting for NCI, come and utilize it here. Partners capital accounts, draw something like this, exactly like this. No, they must. Oh, she's asking, can they fail to tell you the ratio? They only fail by telling you that they were equal partners. So if they were equal partners, you know it is the ratio is 1:1:1. So you take 1/3, 1/3, 1/3. Otherwise, the rest they will give you. I draw something like this: partners, capital accounts, the same setup. Yeah. You are always asking questions. Can you also ask something? Can you ask, starting with the circumstances where can you start with that one? Or what if? Or in the event. So Roman 2. I want, you know what I want? Nobody is perfect, but I want, if people have failed the fact, you become, if everyone has failed, the people who start for the paper have failed, then you become the best failures. Then you are passed. You know, let's be honest. Even God forbid, cripples. If you are put right now to compete running with cripples, of course you'll be number 1. Sure. But what if you have been put with Kipchoge? You'll be behind. But also when you put the cripples together, they will be number 1 of the cripples. So what I want, if the paper is bad and number 1 in the country has gotten 48, I want that 48 to come from here. You get 48, 47. Then those other ones, you can leave them with 09, 08. Then these are the people who are passing. So if everyone has failed, they just check the best failures. Then the best failures will pass. So there's no problem. If it is difficult, it's difficult for everyone. Not you alone. So just do your best. We say the QP is equals to QR. Quality preparation gives quality loss. Imagine if you read, you won't fail. You can't. It's impossible. Alright, so Chana. This is what immediately after exam, you will not even you will see like I wasted your time. You will see that it will be very difficult, but finally you will find that you have passed. And even you'll be wondering if those things you wrote you have passed. Now what about people who have failed? Because you are the best. You are the best of the worst, so there is no problem. And you will not see anywhere examiner telling you to, in the question paper, that give us the answers to the following questions. No. They say attempt the following question. So attempting means you know what is happening. As we are ready to kick off. So the main aim, listen to this. The main aim of this account, you know, these people are partners, they are going to a company to become directors. So whatever is in their capital account, what is in my capital account should be my shares in that company. And this is a checkpoint for you. The balancing figure in this account should always tally with the ordinary shares which they are being given. Can you read note number 5? What did they say?
The shares of HDX.
That's the only thing you not right. The purchase consideration amounted to 110 and was settled by the new company through the issue of ordinary shares. So they were given shares, and the shares amounted to 100 and what? 10. They never gave cash. They gave shares. And the value of shares is 110. It means after preparing capital account, your balancing figure, if you add this plus this plus this, you should get 110. And this applies to all other questions. The balancing figure in capital account should tally with the shares which we are going to form that company with. Remember, we are the partners here. So when we are starting with shares, it means our capital, what you are claiming as capital, is what we are transferring to be what? Shares. So you start by saying balance brought down. And imagine it is marked, and some students just bring it on the debit. Capital account is normally credited. How much? How much? 30, 20. Why are you taking those figures? 30, 20, 10. Fixed capital account. Very good. Then current account, the one who's making you happy, I'll bring them. Current account, how much is due to them in the current account? 12,700. Correct. Those who are the balances in the current accounts. You will see them, don't worry. The balances which we say to capital in the current account, the balancing figures, you transfer them here so that we can know their total claims. Sure. Good. Then realization, there's a balancing figure there in realization. And the balancing figure in realization is on which side? On the debit. So it will be on the credit side of the partner's capital account. So realization, 7912, 7912, 39, 56. Then there is nothing. There is nothing. Yes, there is nothing. That is all. That is what is due to them. So whatever is due to everyone here is what is going to be ordinary. So ordinary shares in Chapete 2, not in 2. To Chapete. The balancing figure. Please stop what you are doing. Listen to this. Very critical. In some questions, the examiner in that Roman 2, instead of telling you to prepare a capital account, that Roman 2 they tell you determine the number of shares to be issued to each partner, to be given to each partner. So to get the shares to each partner, they are just returning you to capital what? Account. So prepare their capital account. The sum of this plus this minus what is here, which is not there, that is the shares to be given. Sure. Yes. So if they tell you in partnership to get the shares to be given to a partner on conversion, just prepare capital what? Account. The balancing figure in capital account is the shares. So add that. I just want the balances. And by extension, you add for me your balances, this plus this when it comes to 110. If it's not 110, then there is a problem. Kindly do that. What about goodwill? Mercy. Goodwill will go to the balance sheet of the new company. There was no goodwill in partnership. If there was goodwill in partnership, I would have shared here. Hey, listen to this. If they had goodwill in the books of partnership, in that trial balance there was goodwill. You know, goodwill is that good reputation. They are the people who had that reputation. You share to them here in their capital account. But now there was no goodwill. The goodwill we determined was on conversion. So it will go to the balance sheet of the new company. Sawa. So can you do that? Finish it first. Need question. You're done. You have confirmed 110. Then we proceed. It's not coming. What is for Chama is coming to how much? 50? For Pete? 39,302. For tender? So if you add the 3, 110. That's it. And please make sure you are doing something. Don't be idle, especially when you have not turned the age of 50. I hope, is there someone who is at the age of 50? If you have not turned 50, make sure you are learning everything. It's something, sorry, not everything. You are learning something. So immediately after exam, make sure you do something. Those who have not done computerized accounting, make sure you do it. Those who have not done driving, even driving, make sure you do it. Like this holiday, even me have a course. I'm going for beauty therapy. I want to learn how to do some things. Then why are you looking at me like that? Yes, it's very important. You must learn new things. What has made me to think about that? There's a friend of mine. They went for an interview. Actually, it was yesterday. Then they wanted someone with CPA 2. CPA 2. So they eliminated everyone, and the two who are remaining, they had all similar qualifications. Do you know what separated the two? And their starting salary was Kenya shillings 150,000. So what separated the two? That one was having a valid driving license, because the accountant was to be given a vehicle. So the company prefer someone who can drive himself or herself than someone who will have a driver to add additional costs. You want to go and replace that person? So make sure you're doing something new. Not for motorbike. Or a lighter note. So that is okay. Let's go to the statement of financial position. So they want the statement of financial position in the new company. All right, there. Chap. Men who are here, even you should do it's called what? Catering. At some point, yes. You don't want to do catering. You can eat everything before. As at when? 2019. So be ready with your calculators. You give me the figures as and if they are required. So for the assets and liabilities, record the taken over values. Book values we are closed in the realization. Right? So non-current assets, go to note number, I don't know, it was mentioned as certain notes. Note number 3. Property was taken at what value? 57. So capture in your calculator so that once we are done, you have the total. So you say 57 plus, we post plus total. Plant and equipment. Plant and equipment. How much is this? 16. Motor vehicles, how much? 95. F&S, 35. I will not forget goodwill. How much was goodwill? 58. Yes, 58. We calculated. Give me the total of non-current assets. And this group of people doing calculator with the two hands, how possible? 91. Thank you. Time is good. Do you know what I'm looking for in this class? I'm looking at 100% pass in a FAR. Those are the ones you will prepare yourself. I'm looking for 100% pass. So please, how do you get the 100% pass? QP equals to pass. That one will make 100% pass. Rest assured. Current assets, taken over values. You proceed down there. Current assets, receivables. Current assets, they said were taken over at book values, which was 18. In the middle column, 18,200. Inventory. Inventory is how much, honorable members? 25,300. Cash. Cash was how much? 81,20. Give me the total of current assets.
I'm seeing some people, they get us and then they start checking at others. When those others just open their mouth a little bit, they become the first people to finish. How much? 51, 620. Therefore, total assets, add the two. Total assets, how much? 142, 700. Equity and liability. So in company, you don't talk of capital, yes? It is by coincidence or by design or by nature. Yes, those are the taken over. Even these liabilities are what I bring here. Yes, because they were taken over at book value. But sometimes you find the taken over value is different from book value. So realization, you close at book value. Then here it was the direction. So that's coincident by what? Design. That they were taken over at the same book value. But if they were taken over at different values, then here I record the taken over values. But realization, you close at book values. Or equity and liabilities. Equity and liabilities. Sorry. Ordinary share capital. So in company, you don't mention directors by their names. That Chanda Pete, no. Just give us the aggregate of the share capital. So ordinary share capital was how much? 110. Non-current liabilities, there was bank loan. This is by coincidence, huh? Or by default? By design. So loan is there. Now you have made my work easier. That one, 18. They were taken over the same values. Current liabilities, payables. Payables, how much? 14,700. Full stop. Total, whatever, should be the same. It's okay, 140. 142 what? 700. So now, listen and listen carefully. Rule number 1, balancing is not your portion in exam. I hope that one you are aware. So, a smart student will ignore those workings. All the workings we did, all of them. Listen to me. A smart student will ignore all those workings and will pass, and is even having high chances of becoming number 1. How? When you ignored all the workings, you know you are saving time. When you ignored all the workings, confirm to me that realization you will still get if you ignored all the workings. Is the workings affecting realization in any way? Yeah. Where? Okay. The workings we did, the first working was adjusting the P&L and appropriation. Working 2 was current account. Working 3 was goodwill. Does it have any impact here? No. If a student was to start realization without doing workings, was there anything to stop that student here? Which one? Where will you stop? Huh? Unless you're not understanding what I'm saying. Did you need workings to do realization? No. So it means realization you get in full without workings. True? Yes. All right. What? Tell me, which working do you need to do realization? Depreciation, do you need that working? You don't need, you just do through your calculator. Sure. Yes. This, then depreciation 2% of 50,000. You subtract and you proceed. So a smart student starts with the realization account immediately, because all those workings we did, nobody will mark. 0. So you'll start with this. You will get full marks here without working. Let's come to this one here. in the balance sheet, before I come to capital account, this balance sheet, what did you need as a working? Apart from goodwill, is there something you needed workings to complete the balance sheet? No, only goodwill. So what as math student will do, you will post all them goodwill is your balancing figure. I don't know that we are selling. So you do everything, then goodwill is your balancing figure, and you get the entire marks for balance sheet, which is how many marks? 4. So you will get 6 for realization, you get 4 for balance sheet. Let's go to capital account. So capital account, how many marks? 4. Sure. So how do they mark the 4? The 4 is 1, 2, 3, 4, 5, 6, 7, 8, 9. Any 8 at what? Any 8 at a half. So a student who did not bother workings will get 1, 2, 3. Then you mess the current accounts. Sure. You ignore those current accounts. Then you come and get realization you will get because realization you never needed this one, the workings. So you get this one. So you get 1, 2, 3, 4, 5, 6. 6 by a half, you get 3. So you get 3 plus 6 plus 4. Those are how many marks? 13. The total marks for that partnership was, because it was not 20. It was not 20. It was 14. So is there a problem? Is there a problem getting 13 over 14? So you have saved time because look at those workings. Will you not consume a lot of time? You will consume a lot of time. And the truth is workings are not marked. So me, I had to go through the entire process for some reasons. Reason number 1, what if in the next question, you are told to adjust the profit account? So you see, when you're told to adjust profit account, you need to know how it is adjusted. If you're told to prepare partners' current accounts, you know how it is done. If you're told to calculate goodwill as a working, you know how it is done. But if those things are not required, you know, in exam, we have a student sitting for a FAR and the student. Which one do you want? You want to be a student or the student? The student will not do those workings. So be smart, be smart. You don't need those. So, by design, now I'm giving you assignments, which I will not do in class, and I'm sharing with you the solution for the same. The conversion has like 3 versions, different. They examine them in different ways. So, this style, I'm giving you the assignment for it with the respective solution. So, rule, you do this one first. You attempt that one on your own, then you check the solution. Then tomorrow, me, I'm doing another design. There's another way they examine it. Then that one also we do. Then I give you assignment plus the solution. Then another one. There are like 3 different ways of conversion. So check. You will do for me 2018. Let me just confirm with you shortly. You will do with me 20. I don't know which one. May 2018. May 2018, write it instead of checking fast. May 2018, question 3B. May 2018, question 3B is called Chanda, Pete, and Kidole. Chanda, Pete, Kidole, those are the. So I've shared with you in your group the solution for the same. But I know some people will just copy the solution as they move. No, do fast. In fact, do this one. Then go and attempt that one. After attempting, you check the solutions. Then you reattempt. Then if they bring that design, you will be okay. Sure. So let's meet tomorrow for another design. Then tomorrow in the evening, I'll meet all the section 3s. Even day class, I told them to come. So that will be our 3rd question. Then we remain with 1. Please make sure you read this theory. How many times? 4 times. 4. Hilda, what's the issue? A note to Mwalimu today. You went too fast. Tomorrow, kindly go very slow. No. When you say Mwalimu is fast, you know when you say someone is fast, you know either that person is fast or you are the one who is slow. So how do you evaluate the slowness and how do you evaluate fastness? Huh?
Yes,
How do you evaluate that speed of a human being?
you understand.
You understanding? How do you evaluate your understanding? Your neighbors.
When they say answer fast,
Yes, exactly. When neighbors are giving answers fast, then it means you are slow. Because, and to that effect, I'm not fast because I only proceed after being given the answer. I don't have a calculator. And also, I was really leaving for you to do the balancing. So, after maybe today you are the one who was slow. Today. She's saying I was moving at 120 kilometers per hour. No, today you are the one who was slow because you are the ones giving me answers for us to proceed. Otherwise, I'll check on that. No problem. Thank you. Do have a nice evening. We meet tomorrow for another question. Nobody. Go home. Okay. Oh.